Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start as normal with Asian equities. They turned lower by midday as downbeat inflation data from Asia's largest economy and the prospect of higher US interest rates sooner rather than later weighed on sentiment. China's closely monitored consumer price index rose 1.2% last month from the year earlier period, a shade below the expectations of a rise of 1.3% and nudging down from 1.5% again in April. Meanwhile, producer price stayed stubbornly weak with a bigger than expected fall of 4.6% in the previous data. Japan's benchmark Nikkei 225 index widened losses to hit a near 3-week low. Japanese economist Minister Akira Amari said on Tuesday it was up to the financial markets to decide whether currencies were moving in line with economic fundamentals. The dollar was steady on the day at 124.53 yen after pulling back from its 13-year high of 125.86 yen, touched on Friday after unexpectedly strong US job growth led to increased bets that the US Federal Reserve was on course to raise interest rates before year-end. In Europe, equities opened lower this morning in the wake of decline in US and Asian markets, with HSBC's announcement of major restructuring efforts a key focus of today's market. The pan-European stock, Euro Stoxx 600 index opened 0.2% lower. While we're at it, the dollar struggled to regain its footing on Tuesday, dropping against a basket of major currencies after a sharp drop against the euro, on, of course, solid German data and higher bond yields. The dollar index was, which tracks, of course, the greenbacks against a basket of major currency rivals, fell 0.2% to 95.072. The euro was buying 1.1315, about 0.2% on the day after, rising as high as 1.1343, topping its overnight peak, scaled after better than expected German industrial output figures. Greece, ongoing talks on a range and, of course, an agreement with its lenders continued to make investors worry and would likely cap the common currency's rise today. The British economy's G7 beating recovery is losing a bit of its luster, according to new forecasts released today by the Confederation of British Industry. The business group now sees growth averaging 2.4% this year and 2.5% in 2016, down from 2.7% and 2.6% respectively in February outlook. This comes, of course, on the back of a soft 0.3% quarter-on-quarter growth reading for the 3 months throughout March. Gold and commodity sector added to small overnight gains on Tuesday, helped by a weaker dollar, but the metal remained near 11-week low as investors fretted over the timing of a US interest rate rise. Gold edged up 0.1% to 1174.95 an ounce throughout the Asian session after gaining 0.2% in the previous session. A weaker dollar helps push gold prices higher, although the outlook for the precious metal remains weak. That shows also in the holdings of the SPDR Gold Trust, the world's top gold exchange traded fund, are their lowest since mid-January, undermining any gains in the metal. Oil prices in the energy sector edged up on Tuesday on hopes of more economic stimulus in China after disappointing data from the world's #2 economy. China's consumer inflation weakened more than the expected to 1.2% year-on-year in May, rising concerns about growing deflationary pressure as the economy cools. Its producer price also fell for 38 straight months. The weaker data continues to point out that sluggish demand in the real economy. The government should roll out more easing measures to lower the real financing costs to boost growth. Meanwhile, US crude climbed 27 cents to 58.41 a barrel earlier, after ending the previous session down 99 cents. Today's major event in the calendar is the European Gross Domestic Product coming out in about an hour time. That's all for today. Thank you very much for joining us. See you next time. Bye-bye.